Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Roster with Victory Fiduciary, and today what we want to talk about for just a few minutes here is just the CPI numbers that did come in this morning and kind of the effect that it's having on markets today and what likely impact we may see for the short term. So CPI, Consumer Price Index, essentially is a marker to show us what the cost for current goods is, and as we see increases in those numbers, then it's basically a sign of inflation occurring or cost increases happening across the board. So we were expecting to see CPI numbers certainly begin to jump as we begin to have more and more vaccinated people, people going back to work, people being able to kind of go out and have some sort of normalcy return, going to restaurants and different things. We definitely expected to see the CPI numbers continue to jump off of the lows that we saw back in March and in early April. And so numbers came out today for April 21, and the CPI numbers are actually 4.2% for the past 12 months. That was a really big increase. That actually exceeded what most analysts were expecting. So this is actually going to be the highest 12-month jump in CPI that we've seen in over 12 years, and essentially now has our CPI numbers at the highest that they've been since the mid-1990s. So really just kind of saying that we have seen a huge inflationary push that kind of happened quite suddenly. So markets have been expecting to see inflation. You've heard in these past couple of videos that I've done that certainly interest rates and inflation have been really weighing on markets, because remember, when things cost more, that means that our potential for earnings is going to go down because it just costs us more to manufacture. It means that, so then earnings will typically decrease. And so we've been pricing in perfection in the market for months and months. So something like inflation or increased costs is certainly going to have a negative consequence, at least in the short term. And so we're seeing that across the board today, that while we were expecting to see higher numbers for the CPI, today's numbers definitely took the wind out of some of the sails. So as of right now, Wednesday mid-afternoon, S&P is down about 1.5%. Nasdaq's hovering right about 2%. And again, remember, Nasdaq is really tech heavy, and so this same index that kind of drug us out of the pandemic is really getting hit particularly hard right now by inflationary fears. And so we're seeing that kind of play out this week particularly. And so one of the things that I've noticed is we're in earnings seasons right now. That's where companies come up, they discuss what kind of they've done in the past quarter, how their earnings have done. Did they meet their projections? Did they meet what their expectations were? But more importantly, they give their forward guidance. So they say, this is what happened, but this is what we see happening for the next quarter, because it's important for these companies to be able to not just be able to show that they were able to meet or beat expectations from last quarter, but they're going to be able to continue to do that in the future. And so what we're seeing is that the guidance that we're seeing from these companies is a lot more subdued, a lot less exuberant than it was in preceding quarters. And it's likely that inflation is beginning to kind of weigh on their minds as well, just as we see that means that costs of things are going to continue to rise for them. So something certainly to watch. Long term for the market, I don't think that it has the potential certainly on the short term to trip things up, or we may begin to continue to see some sector changes and things come in and out of favor. But again, a lot of this is likely going to be kind of just short-term response, especially for areas that were completely deviated from their long-term moving averages. Because remember, all that takes is that exogenous event to kind of help bring us back down to those long-term trends. And so that may be something that we're kind of seeing. We've seen 3 negative days across the major indexes for Monday, Tuesday, and now likely Wednesday for this week. And so, again, we're watching it. But really, it had been not, for the past 30 days, really not significantly volatile. We'd had very, very few days of having returns of negative more than 1% for the past 30 days. So again, we have these periods of time of volatility, so we will need to be watched. But what I did want to talk about today was the Nasdaq particularly. The Nasdaq right now is more oversold than the S&P 500. Remember, the Nasdaq is going to be our more tech-heavy area of the market, and just what I want to do just to kind of show here a couple things. So this blue line here is our 50-day moving average. So you can see we had violated it back a couple weeks ago and then kind of broke out above it. Then again, yesterday, past few days, we violated again. I thought we were going to reclaim above it but we've been kind of selling off this week. So again, watching it much more oversold. Now, relative strength, you probably can't see this from down here, is down to 39, which is actually a pretty that's a number that when we see that, that's getting pretty close to extreme oversold. That means that a lot of times then we can kind of expect to see at least a short-term bounce. So something that we're watching here, and as you can see, a lot of times when we hit these RSIs of 70, that's a very, very overbought status, and that typically will correspond with the top in the market, at least short term. Conversely, as we hit these oversold areas as we did before, then we typically will see a bit of a bounce off of that. So one of the things that we're watching, I am going to just real quick show you. So this is the Nasdaq. I'll go ahead and let's take a look at what is happening within the S&P. And so you can see now within the S&P, not quite as oversold. So, you know, we've had some volatility. This was yesterday, and again today we're going to be, still we will likely not come close to our 50-day moving average. Here's our longer term moving average here. So really, despite even what we've seen with these recent down days, we're still quite extended when you have to kind of like look at the big picture there. And so something that, and when we look at RSI here, so remember the Nasdaq's RSI was down in the 30s, when we're kind of hovering at 52 here, which actually is a pretty normal RSI number. So within the S&P, I would say that we could actually see a little more to go before maybe we see another bounce, whereas the Nasdaq is oversold as it is right now. I'm not saying that it can't go lower, because it could, because even on a long-term basis, on the short-term basis, the Nasdaq is oversold, but on the longer term, it's actually still quite overbought and extended. But just when you're looking at areas of opportunity or kind of like what to expect over the short term, I think it probably the first bounce that we'll see will probably come from those tech areas of the Nasdaq, where the S&P may just have to trade sideways for a little bit longer. So just want to talk today about, again, those CPI numbers that came out today were certainly kind of a big topic today within markets. I think it's probably driving a lot of what we're seeing today. I think that over the long run, while definitely things that we need to watch, because I think prolonged inflation certainly has the potential to kind of cause whether some sector changes or just market leaders to maybe begin to rotate. We will watch that over time, but certainly for the next few days and weeks, likely won't have a huge change after we kind of get through the initial here. So I thank you for tuning in. Again, I'm Ashley Rosser of Victory Fiduciary. Questions, you can always email me at ashleyr@victoryfiduciary.com. We're always happy to help take your questions. One thing that I do want to mention, we're super excited. In about 2 weeks, we're going to be getting our doing our blogs with area experts of different areas of the market. And the first area expert that we're going to be working with is going to be a local realtor who Gina Romano is going to be coming in, sitting down with me, and just talking about things that investors may want to consider, particularly with real estate, and if you're looking to potentially either build equity within your real estate portfolio or even potentially diversify through selling of current real estate. So we're looking forward to meeting with her and again finding new ways that we can kind of serve you and bring additional information to you. So thank you so much for joining us. Have a great week, and we'll see you next week.